TJ the Wheel Deal coming at you live with Uzi Options. Another episode of Wheeling and Dealing, and we're going to use your technical prowess. Uzi, how's it going, man? How was your weekend? How's everything? How are you holding up in this market that is just nothing but volatility? It's awesome.
Yeah. Everything's going well. The weekend was good. I got some rest in, and I thought Monday we'd have a little bit of a bounce continuing from Friday, and that wasn't going to happen because sellers were there waiting for the opening bell. But 2 days now of some heavy selling after what we've already had, and I know we had a strong bounce on Friday, but it didn't sustain itself into Monday, so it's considered a weak bounce at this point. But I think today with this gap down, we might be able to see a small turnaround Tuesday if we can get some buyers to show up, and that might be a short-term bottom that we can maybe look to now trade off of, or at least give our open positions that some are underwater or we're taking on some heat that can get some breathing room and see where the dust settles and see where we're gonna go from here. The tariffs kicked in today, so unless something new comes around the pike on that, I think all the tariffs are in for now, and we'll see if any of the other countries now double up against us on tariffs. But I think all the news that really is to be digested is kind of out there right now. There's no economic data this morning, and nothing's coming on the rest of the day. But we do have a lot of data coming Thursday and Friday, so I think we might get a couple of a day and a half of sideways and a bounce, and then we'll see what the economic data helps us or hurts us further.
I agree. Well, this is what I was up to this weekend. Let me go here. Present. Oh, shoot. Present. So I was out car shopping this weekend. So I picked up the Model S Plaid. Her name is Sophia because SoFi has made the most money out of any stock over the last couple of years. So it stands to reason that I should pay homage to SoFi because it's been a good performing stock for us. We've sold a lot of cash secure puts and covered calls. That's mainly where I made the money, and also when I bought some timely leaps, cashed out those leaps. It's been really, really good, Uzi. It's been really, really good, but I'm still waiting on that big parabolic run of the stock to where it goes to gives me like a 2x from here, so I'm still waiting for it to go to 35, 40 bucks. And I think that's going to happen probably in 2026. So I'm excited for the big money, even though what's been sprinkled in has been good.
Yeah.
But I think the big money is always in the capital appreciation. So anyway, let's talk about it. Let's talk about the stock market a little bit. Let me pull up my the $50,000 account and go from there. Are you guys able to see that right now or no?
We can see Sophia. Sophia's okay.
Show Sophia. Okay, let me do this. Let me go present. Let me stop the screen, and then I'm going to go present. Share the entire screen. We're going to go entire screen this time, and then you should see the squigglies, right? The kaleidoscope.
Yep.
Okay, super. Now can you see the tasty trade?
Yep.
Okay, awesome. So let me walk y'all through it. So the first one that I have highlighted is TSLL. So it is an agreement to buy 500 shares of TSL at 11 bucks. So it's currently in the money. That's what ITM means because it's trading at 10.97. Got paid 51 cents a contract. Right now, the market price of those contracts is $1.51. So I could have gotten $1 more, $100 more per contract if I would have sold them today, expiring on 3/21. So obviously that one's kind of gone against me. So I think a nice teaching segment here, Uzi, is to roll or not to roll? When is the opportune time to roll? This conversation is as old as time in the option selling community. What is your perspective on rolling a cash secure put that has gone in the money?
And how many? I didn't see how many days till expiration you got on that one, TJ.
17 days left, and it's essentially right at the money. The cash secure put strike is at 11, and it's currently trading at 10.90. And I've got a break even of 10.49.
So we all know the tasty trade away would be to roll it now because you're 21 days. You've actually passed 21 days, but that 21 days is when they say to manage. Now, that's their strategy, and it's good, and some people follow it to a T. But so in your situation here, though, you've got an 11 strike. The stock is already down significantly from its swing high of near 20, so it's almost cut in half, and you're not that far underwater. So at this point, I'd wait this one out. I wouldn't roll this one yet. I'd give it time, because all you need is a 2 or 3 day bounce if we get something like that, or even some sideways action. And now you've got 3 days out of the way, more theta decay, and you might be able to close it, or let it expire at at expiration date, or at least close it for profits without having to take the extra time in a new position by rolling it and then booking that loss. I'd wait.
Agreed. So there is so many different schools of thought. And my school of thought has changed throughout the years. And it is also very situational. For instance, if you're selling a cash secure put at a strike price that you are okay legitimately owning those shares, there is nothing to manage because you are okay owning those shares.
100%.
All of those rules are out of the window. That is just the reality of it, because you don't care. You are indifferent. If you are indifferent, I own these shares or I don't own these shares at $11. Let's just say that's where you're at. Then there is nothing to manage. You're just waiting to collect your theta. You're playing chicken with the market because you do not care. You're either going to own 500 shares of TSLL at $11 or you're not. You're good either way. The premium, the $51 per contract, is yours to keep, and you have zero intention of giving that back. That is one school of thought. That is probably 75% of option sellers out there. These are the people that always say, hey, be careful because the stock can go to zero. Be careful on the cover call because you're going to limit your upside potential. These are people that are going to set it and forget it, and they're not going to manage it, and they're going to live with the results. In some instances, I'm that guy in the market, and so are you. It is situational depending on the underlying and the price that you're agreeing to buy or sell those shares. Me here, this was the setup trade, Uzi. What does that mean? I like it at 11, but I love it more at like 9 or 10.
Definitely.
So I sold an aggressive cash secure put. And I'm like, if I get away with it, I maximize my premiums. If I don't get away with it, I manage. But I'm not going to manage it unless it breaks my break even, because I'm underwater, but I'm not really underwater. Because if a week goes by and if it stays at these levels, hell, I might be even on the trade because there's this thing called theta decay that I'm collecting every day that I'm in this contract.
Yep.
So you have to just be aware of the numbers, and you have to be aware of your intentions. Like, where are you at with this trade? Where were you at when you put it on versus where are you at now? If you feel about it the same way, then there is nothing to do. Nothing to do.
Totally agree.
But
especially with your long-term horizon. This is not something you're looking for a cash grab quick. You're looking for it to turn into something huge. I think
you just said a mouthful there, Uzi. Is this a cash grab, or is this a ticker that you're looking to build a position in? And TSLL is something that I want to build a position in that $8, $9, $10 range. So I know that 11 isn't where I would like to take ownership unless there's like a trend reversal with Tesla. Then I'm like, okay, I feel like if I don't own them now, I'm not going to be able to own them. But I don't see that happening during this 3-week period that we got left, right? The 17 days in the market. So I'm actually kind of hoping that it stays sideways and slightly down, and then maybe a week more of collecting theta, or possibly even 2 weeks more of collecting theta, then I will look to put another 30 days on the clock and go from 11 to maybe 1050 or possibly 10, depending on where we're at. And I want to collect even more credit so that I can improve my position in this particular situation. But I'm not going to give away all of this extrinsic value too early, because I'm also, if I had to wait, if I had to take a 17-day nap and wake up and these shares are put in my account, well, I know that I'm just going to turn around and sell covered calls probably at $11 or 1050, which would have been my break-even point, right? To maximize my credits on the covered calls. So I'm kind of in that indifferent camp. And I also have a little bit of money left over still that, let's just say it tanked to like $9. Well, I could turn around and sell more cash secure puts at like 7, take in more credits, and then choose to take ownership at 11. That way I lock in some shares. And then I'll try to eventually take ownership of some at like 750 if it tanks that low. And I still have an average of 9, and it's very manageable, right? Because I'm building out a position.
Most definitely. And one thing I didn't know while I was speaking before, though, is that from a technical level, TSLL is sitting right now resting on the 1.27 Fibonacci retracement level. So it's actually at a key level.
Yeah. So that is what is going on with that particular position. So that should be showing up on the screen. So I'm not going to do anything. Now let's talk about another one that is a little bit, and I'll tell you all about the big account. Everybody always wants to know about the big account. Bottom line is everything's still in transition. So there's no trades going on over there. We only own 4 shares, 4 stocks: STAR, STAR, SoFi, Tesla, Amazon, Riot. 150,000 shares of SoFi and Riot, 6,500 shares of Tesla, and 10,000 shares of Amazon. So what's the account worth? Do the fucking math, right? It's just real simple. And there's 3.4 million on the site. So that's your, how's that for a big portfolio update? Real quick. But nothing's being traded right now because everything's in transition from Robinhood to Tasty Trade. So CleanSpark's a little bit different, Uzi, because I think we can agree that I got all my hand in the cookie jar here. I sold 10 cash secured puts at $10. I sold 10 cash secured puts at $8. Both of those are on the money because it's currently trading at 736. But what I did yesterday to start minimizing some of the pain is I sold 10 naked calls at $11 for the same expiration date, because I'm like, oh, you're going to kill me on the cash secured puts. You can't be killing me on these covered calls as well. So let me bring some of that money through the door. That is one huge advantage of being on the Tasty Trade platform, where I can responsibly sell naked covered calls. So responsibly and naked don't really go hand in hand in the stock market. That's usually true. But in this case, if your cash secured put's getting hammered, the only way to take pressure off that cash secured put is the covered call or the naked call would have to be getting hammered. Both of those things can't be true, meaning that the cash secured put and the naked call would be getting hammered at the same time. So I took this as an opportunity to bring in $150 free through the door, and I can stay in these plays longer without having to roll prematurely and constantly adding time or money to the clock, right? Because these cash secured puts and covered calls, the two main components of these contracts is time and money. So I used this naked call strategy as a way to bring more credits through the door, lower my overall adjusted cost basis with the anticipation that at some point I'm going to take ownership of these shares. And I can stick it out a little bit longer because I'm also in that indifferent camp, meaning I could go to sleep, Uzi, and if I had to own 2,000 shares of CleanSpark at a $9 average and it's trading at 738, I know that the premiums are still going to be okay at $9 if I just sell covered calls at $9. It's kind of a nothing burger in my mind right now. You know what I mean? It goes to 635, it goes to 535. Then now I feel like that's something that I legitimately have to manage, because who in the hell wants to buy shares at $10 when you can buy them on the open market for $5.35? but that's not really the case right now. So I think what I've learned over the last 4 years now, going on my 5th year, Uzi, is that I'm no longer willing to overmanage the account, because I find myself in these trades a lot longer than necessary. And I also give the trade time to go back in my favor, especially when CleanSpark's tied to Bitcoin. If Bitcoin goes to like 90,000, 95,000, this thing could easily spike over $9 or $10. So I want to give time for the investment thesis to play out, if that makes sense. What are the charts telling you on CleanSpark? How low can we go? What's the limbo situation looking like?
So just to touch on some of the points you made, I totally agree with you. And selling those calls at the level you did, I hope you did it yesterday, I think you said, right?
Yeah.
Which was a good opportunity, because yesterday CLSK had gapped up in the morning. So I always like to sell calls if I'm going to sell naked calls on up days, unless I'm putting on a strangle. If I'm putting on a strangle in one trade, necessarily it doesn't have to be where the stock is up or down. It can just be in a place on the chart I like. But in your instance, where you've already got cash secured puts and now you want to bring in more premium, selling calls on a day when the stock is up is what I always recommend, because you're going to get more premium for those calls. So that was a great sell yesterday. Now, technically on the chart, we did look at this one last week, and we wanted it to hold a certain level, which was somewhere, I guess, around 8.5 or whatever. Now we're down below that. And from a technical level, where I have my Fibonacci's drawn, it's going to do a full retracement. And that's going to be at around 680-ish, 685. So it makes it, it's looking like it's going to make a full retracement down to that level. Now, the next level behind that is the 127, but that brings the stock price all the way down to about 250. So I don't see that happening either. So I think it's going to find support somewhere in the middle there. And I'll be honest with you, that 100% retracement level is probably where it's going to be. So I would say in the high sixes, around 666, actually, that's the number from last week, is where that level is we want to hold. That's probably an area where I'm thinking it's probably going to trickle to, and then bounce from there, or maybe go sideways until the overall Bitcoin situation begins to stabilize. Because right now it is like a roller coaster. I mean, the move it's made in the last 3 days has been that'll make your head spin right there.
Yeah.
But I don't see CLSK going down to levels it hasn't been at since probably before Bitcoin even became in the mainstream again. That's around $2.
Yeah. Real quickly, just to touch this, if you followed me closer, you would know that whenever Robinhood halted the account, I closed out all the cash secured puts. That's going on 2.5 weeks now. So that's not me lacking transparency. That's just you not following the story closely enough. So I got out of every single cash secured put and cover call position, and I rocked with the 4 horsemen. And I said I wasn't going to sell anything else because I wasn't able to, because they locked the account, and I was only going to rock with the 4 stocks. So that is what's being transferred over, and there's a shitload of cash on the sidelines and more cash being injected. So I'm eager to get back to selling cash securities and cover calls, because there's about $8 million of cash ready to deploy. So I don't know about you, Uzi, but I like buying stocks when they're at a discount versus when they're at the highs. I don't know, 52-week low is more appealing than a 52-week high for me when I sell options. But
no doubt. 100%.
But I'm not able to do that yet. I just checked with Tasty before we went live, and it still says pending review, because they're having to just really put me through the ringer because of how everything went down with Robinhood. So that is what's going on in a nutshell. Appreciate you, Troy, for becoming a member. Troy was one of our MVP OG recipients yesterday because we had that Bitcoin hodl. So I started dispersing some of those funds from the channel. So it was 5. Shout out to the 5 recipients. It was Dallas Matthew, in no particular order. It was Little Alex, Dallas, Bill White, Option, and Troy Hutch. Those are the 5 MVPs that I've selected for the channel that have rocked with me very, very early in the game. These are people, Troy created the wheel tracker that the channel's kind of become known for. and Bill White took it to another level. So I feel like we wouldn't be anywhere on this channel without that wheel tracker. And I wouldn't be anywhere in this game without that wheel tracker, because that wheel tracker has brought so much levity to my life, because I know exactly where I stand with the trades. And I had my little homemade tracker going on, and Troy essentially took pity on me. He let me use his, and then now Bill White's kind of like beefed it up even more. So yeah, I'll get to that here in just a second. What else are we talking about here? This is a good question. TJ, how would you manage the uncovered call on CleanSpark if CleanSpark is rising again? What would you close to roll? It's a real good question. Not going to play with fire on that, guys. I'm not going to play with fire. If CleanSpark hits my strike on the covered call, I'm going to roll it, because I don't own any of those shares. I'm sorry, I'm going to close it, even if it's at a small loss, because at that point, all of my cash secured money would have helped me out. So any money that I'm losing on that covered call, I'm more than making it up with the cash secured puts that are now printing for me. So I will close it for a small loss, even if it's $100 or whatever. So it's almost like I sold that naked call as a little bit of a hedge versus buying puts. Because there's another thing that you can do, Uzi, and this is a little bit higher level. If cash puts keep killing you, you can turn them into spreads. You know what I mean? You can buy the long call on top of that short, or you can buy the long put on top of that short put, and you can release a lot of that collateral and turn it into a defined risk strategy. Yes or no, Uzi?
100%.
But yes, people don't ever think about that, because it's just like roll. That's what I've shown on the channel. But you can stop the bleeding anytime you want by buying the long puts. And at that point, you know exactly this is the maximum that you can lose mathematically. And I'm willing to take medication here. Even if I lose money on these spreads, I don't care, because now these are at levels where I could just legit buy the damn shares and ride them back up, and all is good and all is fair and love and war at that point. You want to speak more on that, Uzi?
Yeah. So there are times when we'll put on, let's say, a put credit spread. Yeah. And as long as, a trader has enough, capital in the account, and the trade has, let's say, been challenged, we'll wind up opening that spread up. We'll sell the long put for profit, and then either let the cash secured put get assigned to us. We'll take possession of the shares and then wheel it, or we'll just now roll the cash secured put until it begins to turn around, and then close that for a profit. So you actually can make profits on both parts of that put credit spread. So another twist to that.
Absolutely. So let's keep going back here. Are you able to see the tasty trade or no? Not yet?
Not yet.
Okay, let me go to this one here. So let me get on this one here. So you're able to see tasty trade, right?
Yep.
Okay, awesome. So that's what's going on with CleanSpark. So I'm kind of just in a holding pattern there, guys, because I feel like this thing could jump up to like $8.50 or $9. And at that point, that's just not a stressful situation at all. So I'll have made money on the $8 puts. I'll have made money on the naked calls. I'll take my medicine on the $10 cash secured puts. I'll sell cover calls against those shares. In other words, I'm okay taking ownership of those, and I'll call life good. So I guess what I'm showing here is that it's going to be a little bit harder to shake me out of positions moving forward, meaning I'm not going to be rolling as prematurely as I used to be, especially when I picked 4 stocks that I'm okay with. Like if I just own these stocks and I had to buy them and hold them, with the exception of TSLL, because that's not a stock that is designed to be held long-term. This is just a trading instrument. But with CleanSpark, SoFi, and NEO, if I had to own those stocks for the next 5 years, like I'm good with it. It doesn't really matter. So it kind of puts me in the driver's seat with that situation. Now let's talk about one that was printing money when this was the Robinhood account, and now it's not. This is the SoFi position. So I bought 50 leaps, and I'm down $6,188 on those leaps right now. So that's no bueno. Luckily, I have sold 50 covered calls against those leaps at $20 for $417, so 44 days out. And I brought some money through the door, and that's the only green that you see on the screen. So I've still got $376 of extrinsic value left on those particular contracts. And I could realize about $475 or so in profit right now on those covered calls. So thankfully, I got that going for me. Other than that, the SoFi position is just not performing right now because I bought these long calls at 20 when SoFi was probably trading at 14.50 or so. And it's since gone down to $12.37. And that's why there's a lot of carnage in the portfolio right now. When is SoFi going to go up? Again, guys, I have no idea. Do I think that it's going to be well above $20 in June of 2026? I do. I think it's going to be closer to $30 or $35 by that time. So I'm not too concerned about it. I am going to continue to try to bring in some timely covered calls to help me offset some of these losses on paper. I want to, create some realized gains to offset the unrealized losses. That's the name of the game here. So that's how I'm playing SoFi. But what are the charts telling you, Uzi, on SoFi? Because I think it's going to be a tough battle for SoFi, probably for the next 3 to 6 months.
Yeah, I'd have to agree. And from what I'm looking at, and we did look at this last week as well, but from what I'm looking at, it's now it's come out of two patterns that it was in. So it was in, number one, it was in a head and shoulders topping pattern. Mm-hmm. And then while it was carving that out, it also created a symmetrical triangle, which it broke out to the downside through. Now the equal move lines up pretty much even with the 61.8 Fibonacci retracement level, which comes in at somewhere around 11 to 1150. So that would be my target, ultimate target for to make the head and shoulders complete, and to make the triangle also complete, where you'd be looking for a target at that area, and then sideways action to determine, is it now going to find that as support, or will that now become new resistance? Because SoFi has, it's gaining traction in the financial field, and it's got a lot of following, and it's a newer issue out there. I think that's going to be an area where it holds. I don't think there'd be any reason for them to bring it all the way down to the 10 or 8 level, because, I mean, unless we go into a full recession and bear market, I mean, that would be the reason it could. But I don't see that coming around the pike in 2025. So I think by 2026, it could definitely get back to the 15 to 20 level. But short term, my target would be somewhere between around 11 and 1150. And then we'll see what kind of price action develops around that. So if someone's looking to get long and they're not yet, that would be a great area. I would probably be interested myself, maybe buying leaps at, when it gets down to that level, and then buy, let's say, $8 or $10 strike leaps going out 365 to maybe 400 days. But yeah, it does look like it's got a little bit more pain for longs if they're in it. And the 61.8 is right there. So, another little bit of selling, and it's going to be at the target level.
I agree. I just think that people freak out so much about short-term movements and stuff. So I think that's where I'm a lot different than most wheelers. Uzi is, first and foremost, I'm a long-term investor. I just learned how to sell options around those investments. Like, if I had to just buy, hold, and hope, it's what I knew before. You know what I mean? So I'm just like, talk to me in 5 years when I think the Tesla narrative is really played out. Talk to me in 3 to 5 years when I think that SoFi is, probably a top 25 financial institution. Talk to me on the next cycle of Bitcoin when the base is like $250,000 a coin, and let's see what's going on with Riot's hybrid strategy then, or CleanSpark strategy then. Talk to me when NIO's gone from 1 million cars sold to 2 million cars sold, and battery swaps become the standard, because those are my investment theses. All right? So, I mean, I'm always 3 to 5 years out in my time horizon. If I'm not willing to be there with the stock, why is it even in the portfolio today? I just feel, and I just did a post on X right now. I like to share that with you, Uzi. Let me go this way, because this will save you guys a lot of headache. So there's X. So if I go here, Here we are. We're live right here, by the way. Just a little pro tip for you guys. And I do consider myself a pro because I make a living selling options, right? And then being in the stock market. It's the only source of income that I got. So when selling cash secured puts, please don't put yourself in a position where you have to be right and it needs to be right now. We are meant to be the casino. If you're selling options and feeling like the gambler, you're doing it wrong. What is your opinion on my tweet today?
100% accurate. We should. There are going to be times like right now when the market is definitely trying to figure out certain key levels that we're all going to feel a little bit uncomfortable. But for sure, when we're trading, it shouldn't feel like everything is on the line and it's got to work by a certain time. Even though we have options that expire at a certain time, but what I'm trying to say is we can't be trading to pay the rent or to pay the mortgage. Even though that's where some of our profits might go, we can't be having that in the back of our mind saying, "Oh, this has got to work by Friday, or this has to work by next Friday," or because that's not going to be a healthy mindset. It's gonna make someone squirm in their chair. Should I manage this now? Do I close it? So much uncertainty. That's not the way to trade. That's how call and put buyers are usually feeling. Like you just said, they're taking the other side of us, and they're the ones that something has to happen for them by a certain time. So we have to be in a comfortable level of feeling when we're in a trade that we're usually using the right strategies where the odds are on our side, depending on how we go about our trades, whether it's based on delta, technical analysis, or just the stock because you trade it all the time. But you have to come from a feeling of ease, not so much the angst of something has to happen. 100%. Great post.
Agreed. So now let's talk about NEO. This is the last one. So on NEO, this is the only shares that's owned in the portfolio. There's 2,000 shares being owned I bought them at 446 average. It's currently at 414, so down on the shares. I do have some covered calls though. I got 20 covered calls at 550, 73 days out. So those are doing okay. I've got 10 more covered calls at $5. Those are doing, or I'm sorry, these are the leaps that I bought. I bought 10 leaps, 471 days out, $10 out. I'm down a little bit on those, $73. And then there's a strangle with 3 rolls already. So I've got 20 cash secured puts at 450 that are in the money, and I've got the 10 covered calls that are out of the money for 73 days out on May the 16th. So NEO is in a situation where I don't really have to do anything. I am going to look to buy 1,000 more shares of NEO goes to $4. That's the only thing that I'm looking to do with NEO, because I like to build this position up to about 5,000 shares, and I like to ride them up like $2, because then that made me a quick $10,000 in the portfolio. And I think that can happen within the next 60 to 90 days. So that is where I'm looking to make a big, nice little rip on NEO, because I do think that their next earnings are going to be very, very telling, because I think they're going to focus a lot on GAAP profitability. Now, if that narrative breaks down, then this thing's going to have a 3 in front of it, because my investment thesis is based on them shooting for GAAP profitability next year. And then they start talking about it all year. And hopefully they start hitting their delivery numbers. They talk about battery swap, becoming the standard, maybe working some deals with other car companies. Those are the kinds of things that I'm looking for out of NEO this year. And for them to stop playing with the skews, meaning don't keep telling me about a bunch of other cars coming down the pike. Like, work with what you have and make them the best way possible, the most economic and efficient way possible. And let's start working towards getting a profit, because I feel like NEO suffers from scatterbrain. It's a lot like the people that I deal with, the members. It's like sometimes they're bullish on the stock as long as they don't have to own it. So, and it's like, oh shit, they forget about all the pain that the cash secured put caused, but now they get in trouble on the covered call, and they're like, oh my god, these are the best shares since Coca-Cola 20 years ago. I don't want to sell these shares or whatever. Like, it's just they're like bipolar and schizophrenic. You know what I mean?
Okay.
So I feel like that's what Neo is sometimes. I can't get a real clear gauge on them at times. And that's why it stopped being a real big position for me. And it was more like a swing trade because I don't know. I don't know where their heads at half the time. It's like, the money's going to be in capex, the money's going to be on SG&A, et cetera. Or at some point, are you going to turn on the profit machine because Wall Street's giving you 10 years already, bro? Like, and granted, they've been around for 10 years. They haven't been publicly traded for 10 years. Right. But what I'm saying is at some point, it's kind of like when Palantir went public, but they'd already been around for 15 plus years. At some point, Wall Street wants to see GAAP profitability.
Definitely.
And if Neo cannot do that in the next, say, 18 months max, bro, this thing could go to $2. You know what I mean? This thing could go to $1 because I just feel like at some point, even though the valuation isn't really that crazy on Neo right now, if you look at like PSs and things like that, they're not a profitable company, so you can't really look at the PE ratio. Bro, they don't have a lot of time to figure it out. It's kind of like Tesla, like Tesla is getting hammered right now, but it's still a very expensive company. Like a per share basis, it's a very expensive company. So they're going to have to deliver some numbers here pretty soon, dude. If not, I think 200 is inevitable for Tesla. Hell, I feel like 175, 150 could possibly happen for Tesla too, especially with the sentiment being so shitty right now with Elon and being very, very political and alienating, half of the world with the things that he says and does. I mean, who knows? But again, it's like, what's your time horizon? Like, does it matter right now? Yeah, if you're underwater with some cash secure puts, I can understand how that matters for you. But 3 to 5 years from now, if you're still trying to like build out all these positions, if you were looking for an opportunity, if you've been responsible with your cash, I feel like the opportunity is coming your way, and are you going to be able to take advantage of it is the question.
Yeah, I mean, I'm looking at some of the recent news on Neo, and in February, they just delivered 13,000 cars, up 62% from last year the same time. And February alone in China, they had huge EV sales. It's saying they're the hottest in a while. So
they're saying there's something wrong with your audio, Uzi. It's saying something about your Discord sounds. I'm not sure what that means.
Okay. Let me see if I can mute that. Yeah, let me see if I can mute that then. Let me see. But can the audience hear me okay though now? Am I speaking okay? You can hear?
I can hear you. I think there might have been a slight echo. I couldn't really detect it, but I'm not like the best. I don't have like the best auditory skills.
Yeah, I'll bring the mic a little closer to me. Maybe that'll take it away.
Yeah.
But yeah, Neo's sales have increased 62% from this time last year. I mean, that's pretty good. I mean, even if it does half of that for the next year, it's still on an increase. I think that's a good level to build off of.
I think the issue with Neo is that it was such a high flyer. It went to like $60. So people got real euphoric, right? But the reality is the valuation didn't make any sense. It's kind of like the first time that SoFi went above 20, 25 when Palantir went to like 38 or $45 early on. The valuation was like so out of whack, kind of like the way that it's out of whack right now. And I just think it's, in the short term, it's the old stuff that everybody knows, right? In the short term, the stock market's a voting machine. In the long term, it's a weighing machine. Valuations matter. The numbers matter. And I just think that we're not in that market right now where you have a good story and you're just going to go to them. Like the numbers are going to have to support that narrative in order for the stock market to like reward you and to keep it there. But I'm looking at CNBC right now, and it says that the NASDAQ is down only 10% from its all-time highs. Guys, I think we're just getting started here. You know what I mean? I think we're just getting started here. And if this is really, really painful, then I think that maybe we need to start talking about position sizing and and portfolio management, bankroll management, and that kind of thing. Because I think that if your portfolio is causing you stress, it might be fair to say that you're playing a little bit too big.
Yeah, or got caught with too many short puts. There's a lot of premium sellers right now that are taking a lot of heat.
Yeah.
I do know, we all know a lot of traders out there that run Discords, and there are some of them with thousands of members who are, 20, 30 points, sometimes even more underwater on some of their positions. Tesla, Amazon, some of the bigger names, not Apple, because Apple
there's a lot of the Bitcoin miners, MicroStrategy.
MicroStrategy, yeah. I mean, and some of the retail stocks have been taking a hit. I mean, but across the board, there's a lot of people that are probably overextended slightly or a lot by a lot, and it's very painful for them. So there's no doubt we're at a critical point. I don't see, though. Again, I'm not an economist, and I'm not trying to give any advice. I don't know that we're going to go into a full-blown recession over this. I mean, anything is possible, and we have been due for a pullback. So now we've got somewhat of a pullback. Do we go into a 20% correction in the Qs and 15 on the SPYs? Maybe, but we're halfway there, a little bit more than halfway there on the SPY. But it's not usually a straight line down. We haven't had that flush day. I was hoping that today, and I'm thinking today with the gap down after multiple red days, that today would be the flush. We gap down, we do a turnaround Tuesday, and we close green, and then we build off of that. That's still yet to be seen. But I agree with you, TJ. This could be the beginning of something we haven't seen in the last, 2022 was the last back, and then we had COVID before that, but we have had 2 back-to-back years of 20% market returns. So to think that that's going to happen again would be a little bit much, and to see us barely up for the year would also be an okay year, and given off what we've had the last couple of years. So, I think we're at a critical point, though. I agree. If we don't catch some support sooner or later and get a little bit of good news after all these tariffs have taken effect and some of the economic data this week, it could get ugly. It could get uglier for sure. And then margin calls would kick into some accounts.
Possibly, yeah.
So, it's definitely, we're getting to a critical point, and we've also come down a good amount where there could be a breather. It could be a breather, and where we can get out of some of the positions that some of us are in that need a little bit of a shot in the arm to get out of them. And then, I'm recommending to everyone I talk to, listen, let's get out of what we have and let's get to the sidelines, get some more dry powder and cash on the sidelines in case we need it for a bigger move down.
So what I always look at, Uzi, is I'm real simple. Is I use one metric, and I use it for everything across the board. Whenever things are looking kind of crappy the way that they are right now, and it's not that they look crappy, it's they just feel crappy, and there's kind of a difference.
Mm-hmm.
Like your feelings aren't facts. So I think that things feel crappier than they actually are. So look at my beloved SoFi, and it says, and I put it on year to date. So year to date, it's down 18%. So it's definitely in approaching correction territory. You know what I mean?
Definitely.
From where it was last year. So I'm going to stay on that metric year to date, and I'm gonna just go through the 4 horsemen. So that's SoFi. So it's star. So then the next one's Tesla. So I'm going to go find Tesla, TSLA. And I'm going to stay on that same year-to-date metric, down 33% on TSLA. If I go TSLL, it stands to reason that it should be in the 60s, right? Year-to-date is 62%, because I'm looking for the deal. Like, where's the deal in the stuff that's in the portfolio right now? I look at Amazon. So let's go look at a year-to-date on Amazon. I mean, this year to date is only down 8%. So, I mean, is that really a deal? You know what I mean? Like, it feels a lot worse than it actually is. And then what's the next one? Riot, STAR. So the next one's going to be Riot. And I'm going to look at a year to date on Riot approaching that 20% negative. So, I mean, it is like, these aren't really screaming buy levels for me. just based on a real simple elementary metric year to date, because a lot of times things feel a lot worse than they are. And it's like, oh my God, the portfolio is down $2 million. Well, I mean, shit, when you own 150,000 shares of Riot, SoFi, 6,500 shares of Tesla, and 10,000 shares of Amazon, and everything's down year to date, well, that kind of makes sense, doesn't it? I mean, the numbers are going to tell you that this shit's going to be down quite a bit because you own a lot of shares. So you have to be able to deal with that. But I'm like, I'm looking for the deal. Where's the deal? So stuff that's not in the portfolio, things that stand out in my mind are like this SOXL, because the semiconductors have been getting hammered. So I look at the year to date over there, and that's 27% to the no bueno. That one's interesting. I know that in phase, I keep seeing 52-week lows over and over, although this thing seems to be up today for some reason. Year to date is 18%. You know, it was down probably a little bit more earlier when it was in that $53 range. And then I look at the high flyers like Palantir and Hood. If I go to year to date on Palantir, bro, this thing's positive 7% still year to date. If I look at Hood, and I look at the year to date on Hood, this thing's still positive 15%. So what I'm saying, Uzi, is I'm failing to see the screaming deals out there aside from the shit that I'm already in, which is Tesla. That one's starting to feel like a deal, but it's a deal compared to where it was. Does that really make it a deal, though? And I think that's where valuations matter, because there's a lot of people that are like, maybe if it goes down another 20%, I'm interested. The people that aren't that bullish on Elon, that aren't that bullish on Tesla, that aren't that bullish on EVs, and aren't that bullish on all of these verticals that Tesla may or may not have, they're like, talk to me when it's 175, talk to me when it's 200, then I maybe get excited. So I think it's all very subjective is what I'm saying.
I agree. Now, you raised some good points. And so traditionally, from what I've seen in my experience is this: if we're going to go into full recession and bear market, then nothing is going to be unscathed. Everything is going to fall 30 to 70%, let's say. But if this is just a pullback and we're going to keep uptrends, then what you're actually illustrating by your illustration there, what you're showing is that
this is my technical prowess, Susie. I keep this shit real simple.
but in simplicity can sometimes come wisdom, because what you're showing are the stronger stocks in the pullback, which would be the ones that will be the first to show some strength and resume the trend when we start to find if this is going to be, a swing bottom. This could be an area where the market, sits for the next 3 to 6 months, let's say, until it figures it out. But those are the stocks you just pointed out that weren't down so much, like SoFi. SoXL is down a bit, but that's
like CleanSpark down 18% year to date. I mean, these are stocks that I've been in. Let's look at freaking Neo. Like, what's Neo doing? I'd be willing to think this thing's probably flat. Like it down 5%. I mean, what are we even talking about here?
Yeah, and by the way, solars are catching a bid today. I checked. First Solar is up too. It's up 3%.
Yeah, so let's talk about Nvidia, right? The market mover. Let's talk about Nvidia. Like, what is it really doing year to date? Is it really that bad? 15%. I mean, is that really carnage? Because Tesla was down 35%, 33%. I mean,
Nvidia is facing some headwinds. They're starting to catch some negative news.
I hear you, but I'm just saying we can't say that this is like a screaming deal. It's only down 15% year to date. Freaking Palantir is up. Like, show me how that's a deal. I mean, like, this is crazy. Wasn't Hood up 15%? Like, show me how that's a deal. What about that company HIMS? Remember it caught a real big bid earlier?
Yeah, HIMS.
So let's look at a year to date though. This thing's up 58%. Show me how that's a deal. It's a deal compared to its all-time high at 68, but is it really a deal? And I know I know it's going hand over fist. I'm not negating or refuting any of those facts. This thing is growing a mile a minute right now, but it also has some FDA headwinds. It has some RFK headwinds potentially, and semaglutide and tirzepatide and GLP-1 and all this other crazy shit. Yeah. But what I'm saying is, are there really deals, or are you just angry because your portfolio is not at an all-time high anymore? And you're like, oh man, I could have sold at the top. Well, dude, what game are we playing? I mean, are we talking about timing the market, or are we talking about time in the market? Because what I'm going to do, guys, is I'm real simple. I'm lazy, so I don't want to do too much. I'm going to pick a handful of stocks, and I'm going to sell puts, and I'm going to sell calls, and I'm going to collect premium, and I'm going to roll when it makes dollars and cents, and I'm going to buy the timely leap. That's my game plan in a nutshell. And then sometimes I like to use put credit spreads for cash grabbing because it's more capital efficient than tying up all of the money for cash secured puts. But that's the extent of my arsenal. And I try to look for the opportunities where that works. If I can't find that opportunity, then maybe I just don't need to be doing a whole lot at the time. Like, you don't always have to be pushing buttons, guys. Like, sometimes the best move is to just kind of sit on your thumbs and do nothing.
100%. Yeah, that is a position in and of itself. That's a decision and a position. So it fits into everyone's. That should fit into everyone's trading strategies at some place. That should be a line item. Doing nothing is one of my positions.
Yeah. They call it the arm folding technique. There's a gentleman in the chat, Mr. Premium of the Option. He used to be one of the wheelers, and he calls it the arm folding technique, where you just sit there and you collect theta. And I think this is that. I don't put anybody on blast. And when I do FaceTimes with people, it's between them and I. But this is something that's very universal with probably now 300 FaceTimes or so that I've done. Is people treat their portfolio like a video game.
Yeah.
And they feel like they gotta make a certain amount of moves to feel this. And here's your quote of the day. Activity does not equal productivity. Sometimes the best thing that you can do is just sit on what you got.
100%. Totally.
Just sit on what you got and let it play out. You sold that cash secured put for a reason. Now, if you sold that cash secured put with zero intention of owning those shares, or with money that you don't have to take ownership of those shares, where does the blame lie? Where does the blame lie?
Yep, 100%. Right on the trader, because the trader has to be the steward of his finances. He's got to be there's no one looking over his shoulder. Typically, we're all on our own. Unless you have someone that you answer to, we're all on our own. We can get ourselves in a whole lot of hurt just by thinking the more I do, the more I'll make, and the better I'll be. It's not necessarily the case. Sometimes doing nothing is just the right dose of medicine, especially even if it's a challenge trade. Let the odds work out. Again, we are the casino. We're not the gambler. So the call buyer, the put buyer, the spread buyer, they have to have something happen for them by a certain time. We might be in a challenge trade, but again, letting it come to fruition and letting the odds work is usually your best course of action. That's not to say you should always sit in your hands and do nothing. There are times, but most part, once you put that position on, let it work until you get to that place, whether you're going to be managing at 21 days till expiration, or until you get to a stop level where you say, this is it, this is my stop out, depending on what the strategies and the rules are the trader is utilizing. But I agree. Sometimes sitting on your hands, crossing your arms, like Mr. International says, is what you should do.
Yeah, and I wanted to finish it off with this one, because this has been the year of the Bitcoin narrative, right? Because we have a very pro Bitcoin administration, a pro crypto administration.
Yep.
But we have Bitcoin that's year to date, it's only down 11%. So is that even a deal? You know what I mean? Like, I'm just saying, it's just like, I don't think things are as bad as they seem to you. And it might be because of how your portfolio is allocated. The reason that the portfolio feels a little bit bad for me and for us as a family is because I chose to own so many shares of SoFi and Riot and Tesla and Amazon across the board, across 4 different portfolios. So all of that shit is getting hammered right now.
Yeah.
But at the same time, they catch a bid, then no harm, no foul. The question is, did I make money along the way? Right now, I haven't made any money on covered calls for the last 3 weeks and going on 3 weeks on cash secured puts. So because there is a lot of money on the sidelines, the only pain that I'm experiencing right now, guys, is there's definitely some things that I want to sell some cash secured puts on because they are also at levels outside of the 4 horsemen. They're at levels where I'm extremely, extremely intrigued. For instance, TSLL. Do me some cash secured puts at like $8 or $9 30 days from now, and I like my chances. So that's the kind of stuff that I'm looking at, and I'll pull up the other portfolio right here real quickly on the phone. So I look at TSLL because it's a different way to play Tesla. And I go just March the 28th, and at $8, selling 1,000 contracts would make me a cool 42 grand.
Nice.
That is the kind of shit that annoys me right now. Because that feels like money that is legitimately being left on the table during this transition. So I gotta leave here soon because I got a phone call at 11:15 with Tasty Trade, and it isn't a happy phone call because I'm not happy with them right now. They need to make this shit with Robinhood happen already. Communicate with each other because now you're like legit costing us a lot of money. Because I'm like, I could do that trade over to the tune of 3,000 or 4,000 contracts with the amount of money that's on the sidelines. And that's $160,000 bill that nobody is ever going to pay me back. That is the only thing that is pissing me off right now. Tesla going up, down, and sideways, guys, I don't give a fuck. I'm in Tesla till 2030 minimum. Probably 2040 if I like Elon's replacement. Because Tesla is a monster, dude. They have so many verticals that I believe in. And I don't have to be right now. That's the thing. If you want to judge me on the performance of this last couple of months, dude, be my guest. It doesn't look good. You're winning. You be right, I'll be rich. You know what I'm saying? Like that's whatever. But I just feel like by the year 2030, we're going to be talking about Tesla being neck to neck as the largest, most profitable company in history, and from a market cap perspective as well. By 2035, it's not even going to be close. That's how I feel. That's the bet. I think Amazon's still going to be doing Amazon things. I'll still be wondering why am I even in it because the premiums aren't that good. You know what I'm saying? But it's something that I want as a cornerstone for the portfolio to sleep well at night. That's it. That's why it's in there.
I like Amazon too. I like Amazon, Tesla for the long term. I totally agree. I don't think Apple is going to be the force it's been that it's been for the last 20 years. I think Apple is it's going to take a little bit of a hit, only because of the fact they've been changing. They've been changing things a little bit, and I don't think their followers are liking to a certain extent. That's another topic though.
Yeah, it's hard to say. It's hard to say. There's 200 levels. I just think that Amazon's an okay buy here. It's not a screaming buy. The only reason it's in the portfolio is I needed a place to hide $2 million. That's it.
Yeah, and Amazon's great premiums, and
I'm able to borrow against it because of like the anticipated portfolio margin and everything on Tasty Trade. So Amazon is in the portfolio for totally different reasons. Do I think Amazon's going to 400? Not anytime soon. Can it see 300? Maybe. So I'm not in it for those reasons. I'm in it to stabilize the portfolio. Like that's just to be perfectly clear, because freaking tying up $2 million in Amazon stock makes you like $15,000, $20,000 a month in covered calls. It sucks. That same money on Tesla makes you like 80, 90 grand. I'd rather deal with the volatility of Tesla and get the extra $60,000 a month in premiums. That's just me though. That's just me.
I agree. And I think at some point, Amazon's going to have so much cash, they're going to probably put out a dividend. So 2%, maybe 2.5%.
Yeah.
Going forward, I think it's great. It's got a place in everyone's portfolio.
Yeah, no, for sure, dude, for sure. I haven't looked into that one. I don't really like NVDO either. Google's got one. They all got Mag 7. I think all of them have that 2 times leverage. If I'm going to do 2 times leverage, I'm going to do the one that's got maximum volatility, and that's Tesla. Because you're in that thing for the premiums, guys. You're not trying to own these shares long term because of the NAV erosion and everything else that comes with it. So anyway, guys, I got to run, but that's what's going on, guys. We're in a holding pattern. I'm going to hop on this call with Tasty Trade, and we need to get it going here really, really soon because I don't want the market to bounce and I lose out on these cash secured put selling opportunities. I'm not that concerned about the covered calls because these aren't levels where I'm like itching to sell covered calls either. You know what I mean? Like if I sell that covered call on, I'm doing it with like a real big risk, and then it's like I created a pain in the ass trade potentially for some scraps. I'd rather go get the bigger money on cash secured puts, and then if I get caught with TSLL at $8, now I'm excited because I'm like, all right, this shit up to 10 to 12. I just made $500,000. You know what I mean? Like it's it's
that's the way to do it.
It's that kind of thing. So that's what's annoying me is I feel like there's a huge opportunity with TSLL right now, and our hands are tied. That's it. That's the pain. So it's like, where's the screen? There's nothing to share with you, dude. I've already told you all 1,000 times. It's only 4 stocks in the portfolio, 150,000 of SoFi and Riot, 6,500 shares of Tesla, and 10,000 shares of Amazon. You can't take your damn calculator out and do some fucking math. Oh, I don't even know why you're selling options. And then there's about 3.4 million in hard cash on the sidelines that, according to Robinhood, is at least still collecting the cash sweep, which is, nice of them because they probably don't even have to do that based on how we left. So there's that, there's that waiting on the transfer. Every day we're looking to see when the hell is everything over. We did everything that we could do. But dude, I'll tell you one thing about Tasty Trade that has been a little annoying as of late. It was real easy to get them on the phone initially. Now it's getting a little bit difficult.
Gotcha.
So just straight up, we've been talking to Fidelity as well.
Yeah, I was going to say, threaten them with potentially, moving on again because they're not. It shouldn't take this long, whether you have a $100,000 account or a $10 million account. The transfer is a transfer.
I don't know, bro. It's above our pay grade. I don't know.
Yeah,
I don't know. I mean, everybody wants answers that I don't have. Why does Elon say the things he does? I don't know. I'm just saying, I don't know. I don't know the answers to this stuff. And it's just like, what do you want? It's like, sometimes I feel like when I lose my keys, because I'm one of those guys that loses my keys a lot. That's another reason, full disclosure, why I wanted the Tesla, because this is the key now. I don't lose this one as often. It's one key, they have the little credit card type thing that's a key also. I didn't want to get the key fobs like $175. I'm like, no, that feels a lot better in my pocket. So I didn't see a way. I didn't see how I was going to get in the car without the phone and then versus the key fob. You know what I'm saying? Like, I'm just like, it felt redundant.
That'll help you not forget your phone too when you leave to go somewhere. You don't forget the keys and you won't forget the phone.
Yeah, so I'm just like, it's just, you feel unfettered. Like on the Tesla, you feel unfettered because all you need is here, and then now you figure out the Apple Pay thing and all that crap. You know what I'm saying? Like, you don't need anything except your phone. I mean, you could function with just the phone. It's kind of crazy. I mean, it's kind of crazy where life's going. I'm just afraid to put like all the credit cards on the phone though, because then I just feel like it's a hacker's dream at that point.
Yeah. Yeah, that's worth carrying around a little portfolio in your pocket.
I thought about all of this, guys. I went with Tasty because I know people at Tasty. I have an option at Tasty, and I'm trying to make it work. So I'm not going to freaking bail on it right now. It's early in the game, and if the market crashes another 10%, I'm going to be kind of glad that I'm not in cash secured puts, right? Just calling a spade a spade. I mean, let's just think about it. I had 2,400 cash secured puts on CleanSpark at 750 for January of 2026. You don't think I'm excited that I closed all of those out for a 6-figure win?
Nice.
I mean, dude, let's just do the freaking math on how much money this would pay right now to do those. Granted, I wouldn't do them at 750. Now I don't have to do them at $6, right? But CleanSpark is currently at 761, and we go January of 2026, paying $247 a contract. I closed out 25,000 shares at $10.11. So I'm looking at it right here. And then I bought back those 2,400 cash secured puts for $1.73. I can now get $247 for those same cash secured puts if I'm that bullish on CleanSpark still.
Yeah.
So, dude, that's interesting, because I'm gonna do the trade here, like just to see what it pays. So CleanSpark trade options January of 26 at 750, 2,400 shares, 592 grand. 592 grand, guys, and paid 413 grand to close them out. So that's 170, 180 grand to the good. You know what I'm saying?
Nice. Yeah, good trade.
I'm saying if I put the trade on again, but
right.
The responsible thing might be, well, instead of at 750, what about at $5? 3,000 shares at $5, or I got to run to it. The electrician just finished a plug. Anyway, guys, I appreciate each and every one of you guys. TJ the Will Deal signing off. Always, may your sky stay blue, stock. Peace out. God bless you guys.
Good night, guys. Thank you.
Take care, guys.